going to do it. We're going to do it. Welcome. This is the Trading Pit, your home for sophisticated takes on the crypto markets. It's May 30th, our last show of May. And here in the studio, JJ and Benjamin of J Labs. I'm your host, Marconi White. And while crypto majors range, outside forces are preparing to unleash volatility up or down. I don't know. We're going to find out. And the real question is, are we gearing up for one final flush before the end of 2024? Let's discover our fate. But first, it's rapid fire, where I look for simple answers to complex questions. Gentlemen, I hope you're in your seats and ready to answer some tough questions. These ones are on the top of the list. All right, JJ, I'm kicking it off with you. Pop artist Iggy Azalea, hope I'm saying that right, launches Mother Token, which instantly climbs 1,000%. Is this the future of capital formation?
It's something. I think it's
it's something.
We were joking yesterday. I think it's closer to the newest version of celebrity appliances, like the George Foreman grill type thing. You'll see kind of these D-list celebrities come out with their own meme coins, and it's a good way to know if they've misallocated the funds they made during their brief window of fame and they need some cash. I think that's what it is now.
So are you saying that Iggy's going to come out with her own grill top?
Yeah, well, no, this is in lieu of it. Why spend all that time marketing a product?
Yeah, exactly.
Exactly.
Oh.
There's no promise of anything. Just buy the Mother Token.
George Foreman really feels like he missed the wrong period.
Hey, that's a great product. You know, George.
Yeah, that's right.
George nailed it. There's some.
All right. Benjamin, memes or AI, which will capture more mind share this cycle?
In crypto, it will be memes.
In crypto, it will be memes. All right.
It will continue to be AI, of course.
Okay. All right. That's the energy I'm looking for. Bring it back. Bring it back for the next question. JJ, Bitcoin or Bitcoin mining stocks for June?
If you're bullish on Bitcoin, I think you'd be well served to be bullish on the mining stocks here. If you think Bitcoin's going to expand above the all-time highs, hit 80K, I think the mining stocks are poised for a big move in that scenario. And it seems like a good time to be taking some positions there if you believe in it.
All right. Well, we'll definitely figure out a couple of picks, kind of walk through the analysis there later on the show. Benjamin, ETH ETF means a massive altcoin season. True or wishful thinking?
No, it's true.
It's true?
I think it's true. Yeah. ETH, if volume starts coming in, then it should do well for alts.
All rising tide lifts all boats. I love it.
Yeah.
JJ, last question here. Gemini reportedly recovers $2 billion for earn users, over 230% recovery as they return assets in kind. Is this enough to win back retail?
I don't think so. I think retail will come in when Bitcoin's above like 100K or something, and Ethereum's trading 5,000. Then you'll see retail return at the worst time.
So retail doesn't care about restitution or justice. It's all about give me the new price.
Yeah, exactly. They'll care when price is up enough and they see other people getting rich.
Okay. I lied, Benjamin. I lied. There is one more question for you. It's, will the number one meme coin be inside or outside the United States?
Wow. That's
rapid fire. You got to go with your gut. What is it telling you?
I think it will. It's hard to say. I refrain from answering this. It's really hard to say.
Well, remember, these are rapid fire. This is. I want simple answers to complex, impossible questions. So you got to give me one.
Okay, let's take it. It will be inside the United States. It will
be inside. All right. Well, hopefully it's something beyond Iggy or Caitlyn Jenner or one of the B or C list celebrities that we have. All right, we're going to move on to talking a little bit about the market update. We got a lot to break down, price action wise, just from the majors, Bitcoin, Ethereum, but then we want to talk a lot about outside forces where maybe liquidity is going to give us a little bit of a spike. Maybe that final flush we've been talking about a lot on this show, or perhaps it'll be a nothing burger and we continue to grind higher. We're going to break that down. Before we do, I'm going to give a shout out to KS. Hodl tonight, Light Signatures, Preet, Xavier, Hello World, David C. Welcome. Love to see you guys here. Welcome to this Thursday, last show of May. Definitely hit the like, subscribe button, hit the notification bell, and share this wherever you want to have a sophisticated conversation about crypto. Let's get started. JJ, coming back to you. I was looking at the numbers this morning. Nothing really new on the price action. When I was looking at spot BTC, about 68,000, ETH around 3,700, and SOL sitting at 166. I looked at the ETFs. We had a little bit of accumulation for Bitcoin this week, sitting at around 73 million. Again, a short week, but it definitely feels as though the 100 million days have kind of trailed off. We're now into double versus triple digits. And then, of course, we got everything to break down from an options perspective. Now, on Tuesday, before you answer anything, on Tuesday, you said, listen, we're really looking for that flush to come in from the outside forces, from DXY, looking for that weakness. Or if it picks up some momentum, that may actually be a risk-off signal. So tell us, how is Bitcoin looking? What are we looking at as we start to head into June?
Yeah, we keep seeing signs of it in that whatever way DXY ultimately ends up breaking into the end of May, early June, we're going to see a strong move from Bitcoin, I think. And that it's either going to bring us above the 72K mark or down back below 65K, depending on which way DXY ultimately breaks here. And I think, obviously, we had some macro data come out this morning that weakened DXY a bit. And then tomorrow we have the even larger PC report, which should give us some more clarity on here. But as we see, like Bitcoin's been responding essentially to DXY's moves here. So on Monday, DXY fell towards the lower end of the range, and we saw that spike up above 70K. Then as DXY recovered Tuesday and yesterday, got back above that 105 mark that we mentioned as kind of a key line, we saw Bitcoin fall back down to around 67K. And now we see the opposite happening once again. DXY sliding back below 105, and we see Bitcoin back above 68K. So it's kind of creating this, it's tipping its hand, right? That a big move is coming once we finally get some clarity on which direction DXY is ultimately going to break here into the end of the month in early June. In terms of technicals, it still looks like it's in a downtrend. Like obviously it rejected once again from this 50-day moving average. So long as this continues to hold and we see ultimately a move lower, ideally following tomorrow's data report, we would see this bottom end of the range here that it's been trading in since May start to break, and we would see a move below 104, and that would really be a risk-on signal that, hey, you know, we have opened the gates and we can run towards all-time highs from there. But we need to see it. That's waiting on that confirmation.
What's your base case on when that signal will start being fed out? Like, for example, are you expecting it as soon as we get the news tomorrow? We'll start to see the market adjust tomorrow. Is it going to be something we're really going to start to see the following Monday, Tuesday, Wednesday? How quickly is the market going to adjust?
I think you'll see the momentum one way or the other tomorrow. So that would be that data comes out at 8:30. So I'd say by the New York session, you would see DXY either trading probably below 104.40 or back above 105. And obviously the way that Friday's session ultimately plays out as that momentum continues into the monthly close, that's going to tip the market's hand. So I would say if we get that close above 105 tomorrow, it's not looking too good, and close below 104 or 104.40, things would be very encouraging. And it's almost as long as Bitcoin's still trading above 60, as long as it holds the lows of this week, that I think that's your window of opportunity. Like say Bitcoin's still at 68K tomorrow, you see DXY start to fall below 104.40 or even lower than that, and it's possible Bitcoin could remain range bound into the end of the month. And I think that would be your opportunity to get a good long entry there on both Bitcoin and Ethereum if you see that breakdown from DXY.
Okay, so there you have it. I mean, a very simple kind of map to walk out if it's above 105 or it's below 104. What if it's between the two? What if the market really hasn't digested something? Is that a signal that there's more to come?
Ultimately, you want to see it make new lows for the week at least, right? Like you want to see it. If we could get a bearish engulfing candle, this large leg up that we had yesterday, that would be an encouraging signal into the monthly close that, hey, this is a downtrend. You know, it tried to retest it, failed. That would obviously mean this 50 RSI mark here on the weekly, or I'm sorry, the daily chart failed again. The 50-day moving average, this whole MA ribbon would continue to hold as resistance, and that would really solidify the downtrend if we see it start to move back below 104.50, 105, 104.40, anywhere in that range if we start to trend lower. If we're still in this 104.70 range, you know, it's still the same holding pattern as we await some kind of signal there. But sooner or later, within the next week or so, I think we'll have some clarity on this. It's just causing maximum uncertainty into these economic reports, as it often does.
Well, this is also an expiration, a big expiration on the options side. So, JJ, I want you to break that down in a minute. But before we do, Benjamin, I want you to talk a little bit about liquidity. We were talking offline before the show about the fact that we're maybe starting to see possibility of some liquidity constraints. There was a post, I think, from Deharmify, maybe, hopefully I'm getting that right.
Yeah,
Potential net issue.
Yeah.
Deharmify. So the post is basically potential net issuance for notes on May 31st is 105 billion. If this comes to pass, that's a notable liquidity drain. So I think there were some people that were looking at the possibility we may start to see some tightening conditions. And then there's also the perspective that maybe this is being overblown. What are you hearing through your signals or through your sources? What do you think is kind of the base case of what we're looking at from liquidity? Is it something to be concerned with?
So three things. Up until last week, the expectation was that in June liquidity improves because of potential tapering of the QT as per Fed's previous speeches. So liquidity was expected to improve much more than it was, and it is. But the recent one from Dharma is causing a little bit of worries that it might not be the case, that there might be a drain that is happening. The third point is that with respect to the credit line market, the lending rates, annual lending rates has shot up a lot. So it was 6.5% in December, and it was around 11% around end of February. Now it is somewhere around 14 to 15%. So this lending rate that I'm talking about is the credit line lending rate in crypto market for institutions and corporates and hedge funds on how much it costs them to borrow. Now keep in mind that they borrow to both trade spot and futures, so it doesn't directly convert into leverage, but it's about the demand. So there is an appetite for leverage, there is an appetite for borrowing, which also indicates there is a huge sentiment towards trading. So it's like borrowing doesn't happen without collateral. So it means collateral is also coming up. So there is some form of liquidity that is coming into the crypto market on one side. And we've also seen some metrics on M2 side, which is showing a year-on-year liquidity increase. So if I go based on 3 to 4 points that we are able to measure, it's still 60-40, I would say, when it comes to improvement in liquidity. 60% more improvement in liquidity and 40% chances that it's going to drain out. The impact we saw on DXY yesterday is one of the other cause of worry, that are we overestimating the improvement in liquidity? And then the thing is, it's so short term that we cannot be so sure that yet, because it's also May month closing tomorrow, so we have to wait and see. But overall, it is still expected that there is an improvement in liquidity based on variety of factors. But if DXY decides to react in a different way based on metrics, then we'll have to reconsider a lot of this. But in crypto market, the huge demand for borrowing.
I want to highlight a couple points there. You mentioned just the rise in rates going from 6.5 to 11, now sitting at about 14 to 15%. I think I listened, I want to say about 2 months ago, to a conversation with, I believe it was the head of strategy at Falcon X, who was talking about the fact that the credit markets were still pretty lean. Whereas in the previous cycle, they were rather robust. You had several lenders that were here. They obviously went bust during the downturn where everything unfolded. And now it's still a pretty small market. Are you aware if that market is starting to grow? Is that part of the constraint? One of the reasons, obviously the demand is there, is what you're arguing, but are we also seeing that there just isn't a lot of supply coming in from providers of credit?
So number one, yes, a lot of those credit providers went bust. So that was one difficulty definitely the market had, but that was more of a difficulty in 2023 and 22 rather than 24, I would say, because we've seen a lot of market makers and a few other prime brokerages, even in APAC region, are now able to provide very good credit lines. A few of them we've been in discussion with over here in Dubai, because they're trying to also set up shop here. So there is definitely an improvement. It's also about, so it was not only a drop in numbers in liquidity providers, it was also a drop in numbers in amount of people who were requesting for. What we have to keep in mind is that a lot of the hedge funds, lot of the family offices and investment funds that was available back in the day and doing a lot of degenerate work, they basically, like they're done. FTH took care of that, right? And a lot of those guys never came back. One of the few who basically survived was Arthur, 0x from Defiance Capital and so on. But the majority of those clients who were basically borrowing like crazy in the last cycle basically went bust. So they did not come back. So I think right now there is more of a harmony in those numbers between the amount of borrowers and liquidity providers. So if there is a demand for liquidity, you have credit line models to lend for it. Even exchanges are starting to extend that credit line. In last cycle, you did not have that. Right now, you can have coin call lending, you have Bybit lending, you have OKX lending credit lines. I think Binance had it, but they've made it much more stricter now, given the babysitting from the US government. They've gotten tighter, but other exchanges are now starting to do credit lines. So which means, let's say you are a fat client with a good trading history, that you can get a very good loan at a very good favorable rate and trade it directly in your exchange. So exchanges are now starting to compete with prime brokerages and other credit line markets and OTC providers.
So I think the net of it is that we really aren't seeing, it's really opened up. You're saying the 2024 and where we are in this cycle as of now, you've seen credit really starting to open up. The 14 to 15% that you quoted is really a result of demand coming in for that capital and for that credit to be able to do the trading that people want to do. Which again, I think goes back to the general tone of the discussion. Liquidity seems to be on the move in the right direction, opening up. It really is going to come down to what we see from Dixie, JJ, what you just talked about. Do we see it go north of 105 in a sharp rise and drain liquidity from the system, or does it soften and give even more liquidity, which would add more fire to this next move?
Yeah, we're so close to just falling off the ledge of support here. We just need that confirmation. Hopefully it's tomorrow on PC. Fingers crossed. That
I want you to whisper.
Plus the seasonality of, summer months are typically bearish for Dixie. So there's a lot of potential positive headwinds that could unfold here in the next couple of weeks and make June an incredibly bullish month. We're just waiting on that confirmation here. If you see it fall below this line here, it's so close, it could just tumble right over. And if you look here at the what's interesting here is we actually have the first we've had the first whole ribbon MA flip, which is this green and red ribbon that kind of works as a trend pre recognition tool here. So you see it flipped red not too long ago, about a month or so ago, here on the monthly chart, which is, this is the all-time chart, goes back to the 80s. And the last time we actually saw that flip was in 2020, right before Dixie fell from 100 down to 90 or so, or 89. So everything's kind of lining up that, hey, the worst is behind us. We just need that confirmation from the market, and hopefully it comes here shortly.
Could be amazing risk on. All right, let's walk through what we're seeing from an option standpoint, because I know some of the people maybe weren't able to come on Tuesday, but I mean, we have a massive expiration happening tomorrow, and then the next one obviously is June. I think after that, from an options perspective, there's not a lot of activity going on. But can you walk us through what you're seeing for tomorrow? And has anything changed? I mean, is anybody positioning any different at all, given where we are and what we're seeing from the Dixie?
The biggest thing in positioning we've seen this week, obviously we had that massive move last week, right? We kind of had that rebound volatility following the CPI report 2 weeks ago. And then the days that followed, ETH went from 2,800 to 4,000 about. Bitcoin shot up from 60K back to above 70K. So that brought with it a lot of opportunity to sell volatility and protect positions here into the end of the month. And that's what we've seen. We've seen volatility come down pretty substantially over the past couple of weeks, or past week or so, as people have sold their upside, essentially protecting themselves into the end of the month. If we look at put skews, we see they're deeply negative for the May expiry, with Bitcoin trading around negative 6.72 skew, which means people are paying on average more for puts than they are calls for this week's expiry. It's the same for ETH as well, which also has a negative put skew of around negative 4.8 currently. So we see that, and that's a measure of the market protecting itself as we head into this expiration, the pivotal monthly close, all those things we're alluding to. And when we look at the kind of master chart here of this week's expiration, we see that there's a lot of call open interest specifically above 69K. And we see that there as well on the gamma chart where dealers are short. Pretty substantial amount of calls here at 69K, which means the market's basically taken those positions and sold them, right? So the market makers are short those positions into the end of the month, hoping that Bitcoin can remain range bound, and ultimately those positions will expire worthless and they'll profit. A very similar setup with ETH. A lot of people were selling their shorter dated upside in terms of calls on ETH above 4K after that massive spike up last week. So the hope here is that we get past this expiration. I think it's about 3.5 billion on Ethereum and around 4.5 billion on Bitcoin notional value. So we get this monthly expiry behind us, and that could kind of serve as a plateau to leap from as we head into June. And if all the macro factors play along, we have those massive positions expired out of the way, we could see a potential up move here. So waiting on that.
JJ, Benjamin just gave us a breakdown saying he thinks it's 60-40, 60% odds that liquidity is improving, not necessarily a liquidity risk event, 40% otherwise. What's your take on this, Dixie? I know you're very much looking at in the moment, waiting for tomorrow, but what's your base case that you're looking at? What is your expectation right now? As if you think about as we're going to be heading into next week, what are you expecting the market to look like? The Dixie's weekend and
until it's above, like I just kind of trust these indicators, right? So this is saying it's down. It's been a pretty reliable signal. But if we see it flip, we see this get over here tomorrow, that's a risk off signal in my mind. You see it back above the 50-day moving average, that 105 mark, possibly see this ribbon flip. It makes a move back towards that upper Bollinger Band. That's risk off. There's no other way to cut it. It would be hard to fight against the market in that kind of scenario. Likewise, like we see how compressed it's becoming here, right? So a drop down and it loses the 200-day, loses the 100-day moving average and this lower Bollinger Band. That's bullish. Like it's as simple as the chart is telling you everything you need to know. And I think the compression that we see here, specifically on the daily chart, how tight these moving averages have become, are telling you that a large move is coming in one direction or the other. So when you start to see signs of the range breaking, I don't think you want to stand in the opposite direction of that momentum, because I think whatever happens next could happen rapidly, whether that's some kind of unexpected easing or that liquidity crunch Armageddon. In my mind, I think they're both probably, I would say right now, it's probably 70% odds that DXY is going to break bearish into the summer months and 30% odds that it's going to blow off and cause a liquidity Armageddon, just because I don't think they will allow that kind of event to happen in an election year. But it's the downside potential of it so massive that you can't
rule it out.
Yeah,
you can't
exactly,
rule it out.
Exactly.
So I for everyone who's listening here, we've talked several times about this liquidity Armageddon event. We never said it was an absolute certainty. We always said it was a low probability. If it does come to pass, it's going to be an amazing opportunity to get into some positions. You're going to have that dry powder because you always listen to Marconi's PSA at the end of the show, because you listen to the entire show, obviously. Who wouldn't? Okay. So that gives you some idea of what we're looking at from an options perspective, the risk from a Dixie point of view. Benjamin, I want to come back to you. Do you see anything from the perps side of the market that is maybe giving you a little bit of sense? Is it all signaling the same thing, that liquidity looks like it's promising, that the market is kind of gearing up for a break higher? Are you seeing some signals perhaps that somebody knows something, that they're expecting a bearish move?
I still think it is a consolidation period. Even if it is a bearish move, I do not think that 60K will break. I don't see a huge change in market structure yet when it comes to BTC. We've seen a lot of bid side support at 63K area come in, at 60K area come in. I do think probably the bottom was in the April Armageddon that we already had, but it's possible the market is not ready to start running higher. Let's say the 80K and all those targets that we are thinking of. It's probable that it's not ready to start running higher, especially with the news of ETH ETF. If there is a place where liquidity will go in order to gamble, that will be ETH and its beta rather than BTC, because it's already had a run, and we are seeing a bit of slowdown in numbers when it comes to BTC, and you have the Mt. Gox thing, you have Gemini. There's so many things that's already going on. Liquidity improvement will definitely help the overall market, but ETH BTC has also shown some strength. And what we are seeing is basically filling off the gap that ETH had a week ago in the huge push. And it's coming down again to just see how far it can fill the gap. And if this consolidates longer, then ETH could run higher. I can even see a possibility of a DeFi summer, as CT says, but I remain skeptic when it comes to over bullishness in a summer cycle. It's not common at all, and I don't want to take a few instances from the history to think that this Q3 will be any different from what we saw in previous years of Q3. So I remain skeptic, but
yeah, you're skeptical from a historic analysis standpoint and
Yeah.
knowing the behavior of the summer rather than anything data driven right now that's suggesting one way or the other.
yeah.
Okay.
So
Okay.
when I look at it, if you look at total 3, so one of the reasons why not giving up on bulls completely and saying like, hey, let's just take off for another 3 months and not look at the market at all. That's what I wanted to say towards the early May. I wanted to say that because I really am a big believer of sell in May and go away model because it's worked so well over many years. It's not uncommon at all that it works well, especially now that BTC is more of an institutional product than it is not. But the problem is when I look at total 3 on a weekly level, it's fantastic.
Can
It's
you,
basically
I think you had a chart here for total 3. Is it possible to pull that up? Maybe walk through, show a little bit about what you're talking through.
Yeah, let me continue to talk and then
Okay. All
figure
right.
out what to do it. My trading view is just broken a little. But okay, let me quickly open it. I should have had it open.
While he's doing that, I just want to give a shout out to everyone who showed up. I think there were a few additional names, David C, JV, and Delson. Welcome, welcome. Love to see you guys here. Definitely hit the like and subscribe button and share this post and share this show wherever you want to have a sophisticated conversation about how to make the most out of this bull cycle and this crypto cycle as we break down our perspectives. And hopefully you're adding your perspectives as well as you become more learned about different analysis and how it feeds into the way that you're looking at the market.
We're going to dive into an interesting options trade on ETH here as well.
Oh, good.
So
good.
Kind of a little bit advanced, but I think people find a lot of insight into it. I'm going to try and make it as simple as possible.
Yeah, fair enough. Is TradingView still giving you? Yeah. Here we go. Yeah, no, we see it now. Yeah.
When I look at weekly, I keep an eye on this green line, the 640 billion line. And if you see there, you can see the amount of cementing we did. Why do I bother so much about this green line? Is because that was the last base we had before there was this exit pump for 3 months from 30K area to 43K, 44K in 2022. And then all hell broke loose. From Luna to everything started at that point. So the green and red line that we are looking at over here is highly important when it comes to the alt market. And what I'm observing, and every time in the past 2 months that I thought we are going to lose this green line and get back to the red line, the market proved me wrong. It said, no, we're not going there. We are forming a cementing base over here. You will not find alts ever doing this if they were going to top out and drop down to 500 billion or 400 billion. So it tells me that this is becoming a solid base over here near the 640 billion area. So if you think about it, it's a 5 to 7 million drop in market cap at most that you can see when it comes to alts. And if this holds up, if this continues to hold up, then we are looking at red and beyond when it comes to altcoin market. And if on the ETH ETF side, if the expectations are right that we will see a 20 to 30% of inflows that BTC had could come into ETH, if that expectation proves right, then we are going to see a mini alt season or a mini DeFi season. What I'm not sure is about timing it. Will it happen in July? Will it happen in October? This is the part I do not know of. But what I know is the time to exit alts, irrespective of whether you're in profit or loss, would be if we lose the green line. So, with that in logic, I would say if you are fine with taking a 10 to 15% drawdown on entries here on your alts, and saying like, if I lose total 3, I basically, no harm, no foul. I take the loss and I exit. If that is your strategy, I still think it's a very good spot to enter alts, because some of them have contracted and given back some of its gains from May, and some of the alts really look as a good opportunity to enter and target this red zone.
So this offers a good perspective of how to think about the total 3, and I'm glad you brought up the chart, because it's very, at least it helps me kind of see exactly what you're seeing. One question though, maybe we can just touch on it briefly. We've talked a little bit about the inflationary side of many of the tokens that are sitting in total 3. Do you have any concerns that maybe this chart is being, what's the right term I'm thinking of? It's not being as accurate in terms of their strength because it's being inflated with the token issuance?
I mean, it doesn't matter, to be honest, because there will always be tokens which have full float and low float and high float. That's why we look at total 3 assets, right? Because it takes into account of all of those. It already tells you the whole story of the supply impact. So I don't think I will overthink on that part.
Okay.
Perspective of what it is, because the market will price that in. If low float is a problem, then that particular token would already be bleeding, and if the market thinks it's not fair, then it's going to keep bleeding, and that is going to reflect in the total market cap, the total 3 market cap already. So that's why I'm looking at it as an index, and as long as it remains strong, right? I would say it's fair shot to keep looking at opportunities. It is risky because of all the things that we are discussing in the previous half an hour. But what is the risk reward over here is basically, let's say, around 20-30% versus 15%. So that's still 1:2 in terms of market cap itself, which means when it translates to mid cap and low cap, that is a very different level of expansion if it happens.
Yeah.
And if it does not, then basically be ready to take a 10-15% loss on that allocation, and then move on and come back.
Sure.
Recover that green line and come back. That is the easy way to go.
Mm-hmm.
Okay. That's good perspective. All right. Well, usually we spend a lot of time on the upfront breaking down Bitcoin and then really getting a longer time into the outside forces of Dixie. Today, we've been able to combine it all. I think that the message here, it really is, most things look positive from a crypto perspective. If we see the Dixie weekend and liquidity continue to move in the right direction, we should see some continued movement forward. I think JJ has a couple of price targets that maybe are a little bit more bullish perhaps than what Benjamin's talking about. Benjamin's saying historically, this is usually the sell and may go away time frame. It could be grinding higher, or we could see some additional range bound. So, but all of it, I would say, looks to be healthy. And obviously we have some interesting summer plans to get into. So we're going to transition now and talk a lot about trading and some opportunities. JJ, you hinted at the idea that maybe there's an ETH trade that looks pretty interesting. Obviously, we want to talk if there's anything from a Bitcoin options perspective. I'm going to be asking you guys what you think as Solana is kind of a proxy for the meme environment, as well as Benjamin, as you just walk through sort of the total 3, see if your screener has anything that looks interesting that maybe people could think about if they're doing more scalping rather than investing. We're going to break down all that. So be prepared to start hearing some really interesting opportunities. Before they do that, I do want to give a shout out to CoinCall. CoinCall is the exchange that JJ is going to be walking through when he talks about his options. It is a great place to start your options journey. We talk about it all the time in the show. If you're looking to get into options, or if you even have been in options for a while and looking for a new exchange to try out, definitely check out the link in the description to start an account there. Elegant interface, competitive fees, And it's always the exchange that JJ's walking through on all of his educational content, which is top notch, as well as on this show where we're going through the options chain and actually trying to break down some of these opportunities. All right, give that a go. All right, let's get started. So JJ, why don't you start with the Ethereum opportunity that you were looking at? You said sounded kind of an interesting play.
Yeah, so looking at these term structure charts here, which is the market's expectation of future implied volatility levels for at the money contracts, right? So a couple weeks ago, we could see how drastically, how much lower this entire curve was. And there was actually pretty steep fall here as we headed into March. And now we see kind of the opposite effects over the past couple weeks is that we've seen this rise and the back end is getting very expensive. So if we take a look at what that means for contracts here, right? So if we look at the end of December contracts on ETH, let's just look at, say, a $5,000 call option. So this would mean for ETH above $5,000, you have that entire exposure through the end of this year. You would pay $600 for that contract, which means your break-even price, the implied price here, is $5,000 plus 600. So basically $613. Every $1 over $5,613 is $1 of profit at the end of the year. So ETH goes to $10,000. You make $10,000 minus 5,613. Does that make sense?
I think so.
So you see that's a pretty expensive number, right? That's pricing in a very large move for ETH by the end of December. But as we go out to July or come closer into July, we see that a $4,000 call is only roughly $300, $348. So this is setting up an interesting opportunity to where you could buy these shorter dated calls that are closer to the money. And now if ETH has a massive move in the first half of June, you have this full protection over $4,000. And basically the profit by the end of the year, you would need, you would be capitalizing on this spread in that you would sell the December call, or you could even go out further till March. You could sell anywhere above $5,000 if you wanted to do it at a one-to-one basis. We see that the 6,500 call is $350. So you could buy a July call, a July 4,000 ETH call for $350, sell a December $6,500 call for the same price. This costs you $0. Now you have that full exposure between 4,000 and 6,500. So you have that full ETH's worth of exposure. It could be worth as much as $2,000 if it gets up to 6,000 by July, right? So you have all that exposure to the upside and you're not paying any premium. You're using the contract you sell here on the back end to fund your upfront contract that you're buying for the July expiry. And if you have an ETH and you're looking as a way to get extra leverage to the upside, if you're already holding ETH, I think this is a great way to play it, is doing this July-December call spread.
So it's really an other people's money play.
Yeah, exactly.
You talked about it in one of your recent videos.
There's strange things happen in the options markets when things go as out of whack as they did last week during that massive run-up on ETH. And it just creates these weird mispricings and opportunities that you can spot in the chain and take advantage of ultimately. Like that's a massive spread and it's only 5 months difference between these two contracts. It's a massive opportunity. And I think a good one to take advantage of here.
So is the hedging that you already have the other, you've got the two call contracts, bought and sold. Is that enough hedging? People may be asking, do I also need to add a put to that to add additional protection?
You could add a put to it if you want to, but this is a way of getting upside exposure for free through June, right? So you just say, okay, I want to see how June plays out. I don't know how all these things are going to play out on DXY or whatnot, but I want upside exposure on ETH. This gives you full upside exposure on ETH between $4,000 and $6,500, and then you can ultimately close that position before expiry in July and take your profits off the table. Or ultimately, if they both start to fade down in June, you could just close it at what would ultimately be a very small loss.
Okay. All right. So that's the very first play that we're going to talk about. What about from a Bitcoin perspective that many people may be looking at? I just want to say I think on Tuesday, we said listen, there's some interesting plays happening in the options market, maybe not ready, really looking for that DXY to finally give its final signal. Are you still waiting, or are you seeing some plays you could take now?
Yeah, the contract pricing on Bitcoin is just so expensive. It's hard to, unless you're like babysitting this position, right? Like I wouldn't mind taking a end of June or end of July, anything between $70,000 and $75,000 call position at this level personally. And then I would just monitor it very closely, obviously see how today and tomorrow plays out with that PC report, the monthly close, etc. But I think your invalidation is close. Like basically, you could look at yesterday's lows as a stop loss, and if you bought, say, a $70,000 call, maybe you would lose $1,500 max on that position, which isn't a lot considering the potential upside you could get on a move to 80K and beyond.
Well,
But it's not a buy and forget it kind of position here on Bitcoin. It's
Right.
more fluid.
Well, so walk me through what your base case says. Listen, Dixie breaks down. We see the information come out tomorrow. It continues to support Dixie breaking down. What are you expecting to happen to see in the options chain? And then what would you be looking for to perhaps as a play?
Well, if I just do this simple correlation here between Dixie and Bitcoin's implied volatility index, right? So we see anytime Dixie has outsized move to the downside, we've seen the implied volatility index spike massively, right? So if you're anticipating Dixie breaking down below this range, falling below 104, that's telling me I want volatility exposure to the upside on Bitcoin. So I want to own call options before this spike happens, and then I want to be selling them after the spike happens when everybody's rushing into positions because they feel like they need to get call exposure on Bitcoin before it goes to 100K. I want to be the person selling them those contracts because I bought them early, right? I don't want to be the person chasing it. So if I'm looking at Dixie and I've realized, okay, there's a non-zero probability here, probably it's higher than 50-50 in my estimation that Dixie actually does break down in June, I think it's worth the risk reward to buy some call contracts here due to the spike in volatility that could come. Like we've seen how suppressed this has become since March. It's been it's boring, right? And things like volatility typically don't stay boring for too long. So I think this is a good opportunity to look for those opportunities where you can buy up what are effectively insurance contracts, right? And then all of a sudden, when people who have a massive short position need to buy insurance to the upside, you can name your price and say, okay, well, you could have bought this a week ago at 3,000, but now you have to pay me 20,000 for it.
So JJ, but with that, I guess, we said we were just talking about the fact that the contracts look very expensive from a Bitcoin perspective, but also that when the volatility spikes, they'll become even more expensive.
Exactly it. So it's like the risk reward of it, right? So if you're looking at a 70,000 call contract expiring in June, that's a pretty big premium. Like I don't know if I would necessarily buy this one because it's shorter dated, unless I'm saying, okay, I have a 24-hour window where I'm going to buy this position, see what happens within the next 24 hours, and then cut it no matter what, right? Like you have to be very tight with your invalidations. But yeah, in the event that you have to think of like outlier scenarios, right? Like say Bitcoin shoots to 80,000 tomorrow, Dixie falls off a cliff, bull market's on, this contract would be worth probably around 15,000 at that point if that were to happen tomorrow. So that's just to give you a framing of how quickly these contracts pricings can change and why you want to be thinking of both like kind of every scenario, like what happens if price stagnates, what if it goes backwards a little bit, what if it walks its way up gradually. And when we look at like the ETH contracts, I think we pointed this out last week, but just to show it again, how quickly the pricing on these can change in the blink of an eye, right? So here's what happened when the ETH ETF got approved. You see this May 31st, 3,400 ETH call was trading at $40. And then by the end of the week, it was trading over 600. So that's a gain of over 10x in a very short amount of time. And that's why you don't want to be the person buying these contracts up here. You want to be the person who bought it down here, and now you're selling it to people up here because they need to buy it from you. Does that make sense?
Yeah, I think so, and likely it's one of these things that you're talking about the risk reward. If you're looking at this and saying, okay, how exactly do I play this? You could be looking at something that's a little further out, further dated, right? Because we were just looking at June, but really it's looking to get some of that upside when you get that signal from Dixie. So you can obviously get in now if you're holding spot. Already with Bitcoin as an example, then you already got some of that upside baked in. It's not going to be as explosive. If you own the options, you're going to have a little bit more of that risk. And if you're looking at the question of, well, how do I hedge some of that risk? JJ, you've talked about that in some of your videos.
The beautiful thing about holding
you can use some of that to buy some put protection if that's what you're interested in.
Yeah, if you're just interested in maintaining gains, earning a little bit of yield, the beautiful thing about holding spot is your ability to sell calls against your core position, right? So if you own one Bitcoin and you say, okay, I don't think price is doing anything this summer, it's just going to be boring, we're going to be stuck in a range, I don't think we're going to break above 70K. You could sell a 70K call option against your 1 Bitcoin of exposure. Price just chops between 60 and 70 all summer. You collect an extra $8,700 for doing nothing, right? It comes to you automatically. Now, the flip side of that is if we get that massive breakout, that contract you sold for 8,000 might turn into 20 or 30,000. So be aware of that as well. There's always risk with any trade you're putting on. It's just a matter of figuring out what your objectives are and how to structure your portfolio and trades in a way that mesh with your goals there.
Okay. All right. So let's move on. I want to talk a little bit about the screener in a moment, Benjamin. Before we do that, though, we did talk a little bit about Bitcoin or Bitcoin stocks, right? So playing some of those plays. So JJ, when we're looking at those, I know those are typically option plays that you've looked at in the past. I was pulling up some of those, and I think it was there was a comment from an analyst on X talking about that as being the play for the summer. So what's your perspective? What are you looking at there? Because we obviously have a large number of those. You have Mara, you've got Riot. I think some of the other ones I had here was CLSK, CFR. So what are you looking at in terms of that play? How would you actually think about structuring it? Is it the same setup? You've got the Dixie, you're waiting for that to weaken, and then you're going to buy up some of those contracts. Are you doing it now?
Yep. So anytime you look at these, they're all leverage beta. So they're kind of similar to altcoins, right? In that they need Bitcoin to move in an exaggerated fashion in order to get massive gains from them. So like when you see these massive run-ups from, I'm looking at Mara right now, just I think it's the largest miner. So that's kind of my default when looking at miners. When you see these massive run-ups, these are times when Bitcoin goes parabolic. So you see Bitcoin start to break up at the end of October, and then November through December, we saw Mara shoot up. Again, February through March, we saw Mara more than double. And it looks very bullish right now. Like we see it's building the shelf. It's created a series of higher lows. All of the trend indicators are pointing up. I'm looking here on the daily. It's above 50 RSI mark. If we zoom out to the weekly chart on this, it looks even more enticing. And that you could see it just kind of has this potential to shoot up one of those massive candles any day now. I think it's just dependent on Bitcoin breaking above 72K or so. And then we could see an outsized move from Mara and likely a number of all other miners. They're so tightly correlated that I'd imagine if any of these are going to break out, you'll probably see them all move in a similar tandem. Some might outpace the others, but take a look at that whole basket and find which ones you like from a technical perspective.
Are you doing the same thing though? Are you waiting for the Dixie to give that signal? Are you kind of just going through all the miners? Because you said they kind of play as one. Are you looking at all of them and just trying to see if you can find some inexpensive premium, some call options that you can get on now?
Yeah, the beautiful thing about miners like this, right? Say Bitcoin does make that move to 80K in June. The contract pricing on miners is based on where the pricing of, say, Mara has been over the course of the past couple months, where it hasn't been all that volatile, right? Relative to the kind of move it can make in a parabolic Bitcoin environment. So it's just kind of been chopping, right? But I think this could potentially go up to above 34 in the event that Bitcoin does go to 80K. And if you were to look at call options priced in that anywhere above, say, 25 on Mara, expiring at the end of June, they're not all that expensive. So if you know this can double conceivably within a matter of a couple of days, you can buy that optionality for very cheap. And again, your invalidation is so close to where if you see that kind of bearish monthly close for Dixie or bearish monthly close for Bitcoin, you could say, okay, that's invalidated. I lost a few bucks on these call contracts, but I'm not spending a ton of money the way I would if I was buying direct exposure to Bitcoin calls. Right. So it's kind of a way to get that leverage proxy to Bitcoin without having to overspend on contracts.
Okay. So plan here, obviously it's similar on the Bitcoin option side, but just more with the miners, and they're all, the expectations, they roughly move in tandem. So look around for the ones that are going to have that volatility spike and can give you some of that juice going up to the top
MicroStrategy is
side.
looking interesting again too. Let's see.
Oh, we haven't even talked about that one.
And the thing is too about all of these is that there's so much short interest on all of them still. Like the short positions haven't closed. I could pull up some gamma charts, and like if we look at the short interest percentage of float on Mara, it would take 3 days of current volume for the shorts just to cover the position. So over 25% of the shares are short, 58% off exchange short volume ratio. I believe MicroStrategy is pretty similar there as well. Yeah, 20. So it takes 6 days of volume for the shorts to cover on MicroStrategy. And then as we look at the gamma exposure, we see there's a lot of calls being sold. So in the event that Bitcoin does break out above 70K, you see that there's a whole lot of gamma to the upside here on MicroStrategy. I'd imagine Mara looks pretty similar to where you could have those kind of, and that's what really causes the parabolic moves on stocks like this. Is It's driven by a lot of short covering. And I think if you were to see MicroStrategy break up above 1800 or so, that short squeeze would probably happen again, and it might end up somewhere north of 2000, possibly around 2200 or so in the event Bitcoin makes new all-time highs.
Very interesting play. Definitely some risk on the table there, but a very interesting play. All right, let's move into something a little bit closer to home on the altcoins front. I do want to talk a little bit about the meme coin proxy with Solana, but Benjamin, are you still with us?
Yeah.
There he is. There he is. Can you walk us through what you have from a screener perspective? We were talking offline. I think you were talking a little bit about the total 3 play, talking about the fact that it continues to use that line of support. And then you were talking about the screener that was suggesting there may be actually a few plays more from a scalping perspective. Can you walk us through what you're seeing? Maybe even bring the screener up.
Yeah. Screener is up, I think. But so some of the tokens have been doing well the past couple of days for a variety of reasons, Notcoin being one of them, but I'm not a big fan of it. I don't know much about it, so I'm not trading it. But Stargate basically got listed in a bit, so that resulted in a huge volume boost, and it just went up 50% in a matter of 24 hours. RD, surprisingly, RD has been doing well. I do not know why. Even I'm trying to figure out, because RD, I look at it as a beta to Bitcoin, and Bitcoin has been going down. So, but RD went up. So that is a little bit intriguing. But the token, I think, has a better shot at a scalping move, targeting a little bit higher. Is basically TIA. I'm not a fan of the token economics of TIA because it is not great. But when let me share the tab perhaps. When I look at the daily chart of TIA, after topping out at 21, it came down all the way to 7, formed a range, and started forming like a falling wedge type of a behavior in the past 1 month, I would say. Broke out of it, and it is one of the assets which is actually has remained bullish for the month of May, and is still above this week's Monday range, last week's Monday range, and this week's Monday range, last week's Monday range, and also about monthly. And if it clears $12 line, basically we can see it running up to 17 or so. So I think there is a good potential as long as $10 is not lost. So that could be the invalidation for TIA for a potential scalp over here and target like 17. This would be one play I would take up.
So and this is coming off of your screeners, kind of highlighting this as a potential play.
Yeah. So I found it from the screener, but I started looking into all of those options, and I find TIA to be a good bet in the short term.
What's your take on sort of everything rising all at once? Are you expecting that, or excuse me, are you expecting that to sort of happen across if we get that little mini alt season, or are you expecting there to be more winners and losers?
If that mini alt season happens, I still don't think it will be all rises at once. It would be an ecosystem that rises. So either it would be Solana or BRC, BTC ecosystem, or ETH ecosystem that rises. I don't think it will be all at once. But the main alt season that we may end up getting at some point, I don't think that will happen before we see rate cuts, to be honest. When rate cuts start happening and there is a different level of confidence that comes in amongst the retail traders, that's when I think we'll see everything can run type of a narrative come in. I know that everybody feels that is never going to happen, but we've heard this for nearly 2 cycles now. But it will happen. It's just how it's I mean, as long as you have centralized exchanges, you have centralized exchange market makers, you have VCs in one format or other. And now meme coins, we think it is highly social driven, but it's not. It's still a few players, and they know how to scalp in earlier and push it up. So it's still the same cabals. The cabals are not going to change. So it's just different. Don't even assume that you as an individual tomorrow morning you found a cute dog and you launch a meme and it becomes like 100 million. It will never happen. And without the support of these people, these tokens are never going anywhere, right? This is the
Yeah.
law of the land. This is the law of the industry. Get deal with it. That's it.
Yeah, absolutely. Know the game that you're playing, as we always talk about on the show. Okay. Anything else from the screener perspective that you want to highlight today?
Everything else is in the neutral or somewhat bearish zone. We have not been able to hold the Monday range, so it's a little bit weak, I would say. Thanks to DXY, it has made it even worse. So we have to wait and see for all the pointers that JJ basically said in the next couple of days, how it turns out and how this weekly closes. But I don't see much of hope for this week to recover and turn into a bullish monthly close. I would rather expect a much better June than May month seeing some sort of a recovery.
Yeah. I think that's exactly what we've been talking about this whole show. Sort of these signals all look positive, green, not necessarily we're going to the moon tomorrow, but all positive. But we got to continue to see that confirmation. Did have a question here about Link. How is Link looking? I'm imagining that's looking neutral on the screener.
Yeah, it's looking neutral on the screener.
Okay. All right. So that gives you some idea. Ashengard, if I'm pronouncing your name correctly. All right, let's move on. I think to the last question I have here, which is all about the meme coin extravaganza, bonanza, whatever we want to call it. The fact that we talked about this hitting early in the cycle, going back months ago. We talked about the fact that it was perhaps a little bit early, but maybe not, because we've seen some of this pump in the past. And then now we have these latest meme coins that just got launched by these celebrities in the United States. It feels like the meme coin is here to stay. And if you accept that, you know that Solana has built a tremendous amount of tooling for that. And then you also know that you may want some exposure to it, knowing that, like I said, it's here to stay. So is Solana the best bet if you're not going to try and chase these pump and dumps that are coming from cabals? Is Solana the best exposure that one could have to this meme coin frenzy, if you will? Benjamin?
Solana is a good bet for sure. But I think base will still be a different type of a bet eventually. I don't think it's ready for it yet. I think the infra is still getting ready, but eventually it's going to be a competition between base and Solana. That's what I think. I was expecting the ton ecosystem to catch up for it, but I don't think it did. Even though they have Benjamin, a huge user base.
Yeah, so JJ, I want to ask you the same question. So definitely have that teed up in a minute. But I when I see Solana, to me, it's like, okay, I can buy into the token, and then I kind of get exposure to all these memes. I don't have to choose one. On base, unless I'm mistaken, there really isn't a token that you can buy. So you have to go after individual projects. Is that right?
Yes. So it would be more project-based. It's more about that entire ecosystem that can get a boost rather than the potential token.
So I guess from an exposure standpoint, if you're willing to do the work and do the research, you can find some really good projects on base that may give you some bigger upside. But if you're not going to be able to do that, you just want some exposure, Solana may be a good play, having some exposure in your portfolio.
Yeah, I think base will be a much easier tooling ecosystem to onboard people because with especially once the Coinbase Smart abstraction wallet releases, and I've seen some of the early releases on that ecosystem, and it's very good. And the fact that they will make the transaction free of any fee. If you're doing it on base, and if you're basically starting to build onboarding solutions using base as the entry point, right? Let's say for your USDC, if you make base as your entry point rather than ETH mainnet or Arbitrum, then that is something users are excited about for sure. It makes it easy for a lot of retail to also go and trade over there because let's say you want to build like a casino project, all right, I'm going for a super degenerate gambling explanation, and you don't want to pay 0.1% or 0.2% for every single bet that you're going to do on the roulette. Or let's say if you go for ETH mainnet, it's even more. Sure, Solana gas fees is lower, but still there's some fees involved, right? For such situations, then Base is a good bet. It will become a good bet.
So in that case, you may actually want to own some coin. You may actually want to own some Coinbase because those revenues are going to be flowing back to the company.
Yeah, own some of those calls. I definitely would go with Coinbase calls for sure. Yeah. I mean, that is a bet for the entire crypto market itself. Like, if you're bullish on crypto, actually, you should own Coinbase calls rather than even worrying about anything else. That can actually give you a huge beta exposure into the overall market. You can perform at par with BTC, in fact.
Yeah. Okay. JJ, I want to come back to you. Same question. Is Solana the play? Is it now Benjamin just made his case for, is it owning more Coinbase? But if it's specific to the meme side, people want some exposure. How are you thinking about that?
Yeah, I think so Solana has been the driver, right? But the thing about crypto is that it's always shifting, right? It's like tectonic plates. Like what's the popular narrative? 1 month and the driver of something, 1 month it's always changing. So you can't really pin your hopes to anything because it's all evolving so quickly. And I think if you're looking for kind of a passive way to have that meme exposure, I think the Coinbase stock is the best way to do it because you're essentially hedged in a bunch of different directions, right? Like you're diversified into many different things. You're not just kind of dependent on it only making money from memes, which seems what Solana is mostly dependent upon now. It could make money from memes. It could make money from regular brokerage services. It can make money from retail coming in to speculate on meme coins itself, right? Like it's going to collect those fees automatically and return it to shareholders. So I think that's kind of your best way to express, the safest way to express that. And then you can obviously look at the risk curve and extrapolate out all the way to just buying memes that you think are the best and are going to outperform. But I think if you looked at it in terms of a risk curve, Coinbase is probably, coin stock is probably your safest way to get exposure to that without running the risk of ruin.
Okay. Two very strong perspectives here. And I think for any of those who are listening here, we're definitely not suggesting you go out there and buy memes specifically. We're not recommending that. In fact, nothing that we talked about today is actually financial advice. These are just our perspectives. But for all those who are looking at having a sophisticated take, how to maximize their exposure to some of these trends, I think Coinbase sounds like an interesting play. But with that, we're going to wrap it up. I hope everyone enjoyed this show as much as I did. Just tremendous amount of alpha on where you can find plays right now, especially the Ethereum one I thought was very interesting for all those who are looking into getting into options. Now is the time. Benjamin, JJ, thank you. For all the listeners out here, thank you. Definitely be coming back next week. We're going to see what happened with the Dixie and how June is starting to shape up, how bullish it's going to be, or if we all need to sell in May or should have sold in May and gone away. But definitely keep some dry powder. You're going to want it. Those opportunities will be there. This is Marconi White signing off.